Hi, welcome to the Market Alert for Thursday, the 6th of April 2023, the day before Good Friday. So just to let you know, this will be the last Market Alert for this week, and I will see you back on Tuesday following the holiday Easter weekend. Okay, let's have a look at yesterday. Banks and big tech breakdown on bad data. Fed flip-flop sparks dovish dive in rates. So after Australia and Canada said no more rate increases, that seems to have set a tone with the Fed as well, or the rumour mill. Risk off after US data sparks growth concerns, i.e. the growth has disappeared. US stocks mostly declined on further weak data releases. I mean, what do they expect? You increase interest rates, it contracts the economy, and then they're worried about the economy contracting. You can't have it always. And then you've got inflation and all the other issues. Amazing, isn't it? Amazing. What do they expect, these people? Economic news today, unemployment out at 130, and then tomorrow we've got the non-farm payrolls, which will be obviously spark a bit of interest for a while, but it's probably going to be a non-event. Having said that, it'll probably be a major event, but usually if they release something on a Good Friday holiday or a bank holiday, it doesn't have generally the same impact, but we'll wait and see anyway. But forecast of 236 from 311 last time. Okay, let's have a look at the markets, kick off with the Dow and work our way through to the metals as we normally do. And in the Dow yesterday, the market managing to rebound a bit with a bit of buying or short covering yesterday, but overnight prices down once more, just below the 5-bar moving average. Still got the resistance at 33,577. Might need the non-farm payroll numbers and thin market trading to move it through this area tomorrow. 30-minute chart, you can see that in the morning that we moved lower on the electronic market, and then we kicked off with the US with the market moving up 150 points before being hammered back to the downside. Then there's the news in there, and then back up to the 33,500 level, which is this level here. And we saw some selling coming into the market, and we've traded down to below the DP on the overnight. Nowhere near the low at the moment, but if we do move down, we've got the S1 and the 200 MA in the way here, and also obviously supports as prices move down as well. If we're going to move to the upside today, then we've got to take out the close, which is always a good area to try and get rid of. We can get through that. We're going to get back through the DP as well. Then that 33,500 level, and then all the way back up to the high of 33,550, just to make it easier. In the German DAX, the banks weighing on this market yesterday. However, there's a bit of demand overnight, but this is not holding as I record. We can see the market down there. In the 30-minute charts, yesterday the market moved up to the close. This became a resistance area along with the 50 EMA. The market then traded down to the 200 for 30 minutes, then bounced off, and then ended up going through. And once through, you see the selling increase there. We then had a bit of a bounce in the morning with the market coming back towards the 20-bar moving average, and then down we went, and then back to the BRN, and down we went to the S2 before a bit of a bounce there back towards the DP. Overnight, the markets failed to hold above the close and has traded down with red bars all the way, taking out the 15,400. But we are currently, by the looks of things, down at towards the 89. So don't be surprised if you get a bounce off the off the low, and the 89 there. You can see the market finding a bit of support there, and also there's demand there. Not a lot, obviously, because it's thinly traded, and we're oversold as well. So we could see a bit of a bounce off this area when the futures opens at 7 a.m. In the 5-minute charts yesterday, you can see the market there in the futures moving higher, trading up to the close. You can see they're moving down, and throughout the day bouncing up and down and moving through the different levels back towards the low here, Got the low just there, coming back 100% and then back down, stuck at the averages, back through, and then eventually finding some support at the S2 there before moving back off that level. And then overnight the market very narrow range there, which is quite quiet given what we've seen of late. About a 50-point range there. And just to look in a bit more detail, there's the low. The market already starting to move up a bit there, but this is 89% retracement of the move that we saw in the 30-minute chart. Trades for the week, 34778, 2.92 for the profit factor, and the win-loss is 60-40. So yeah, reasonable week. There's been a few challenging runs of losses, but otherwise not too bad at all. Still a profit, and heading in the right direction for another profitable week of trading. And in the S&P 500, the market down on yesterday's trading session, down on the overnight as well, stopping at that 89 area. Let's just draw in some fibs, give you some targets on the downside just in case the market continues. You can see 38 there is important because the market traded more or less down to this area yesterday. If it breaks, then you've got the 50, the 62, and then in between 62 and 78 you've got those two converging averages there as well. So if you trade the S&P, keep an eye on those numbers. There's the intraday yesterday, traded up to the close, and then we made our way down, taking out the low of Tuesday there. The market then rebounding back to the 200 MA, but failing to hold above the close in the DP overnight and just drifting down a bit closer to the low than the Dow, as it can be seen there. And at the moment we're looking at what have we got there, 62%, 78% retracement. So we'll need to bounce off this if prices are to move higher. If not, we're going to retest the low and the 89 there. And in the FTSE 100, stuck at the 62% retracement there. Again, downside potential risk there. These would be the areas of support. The 50 is tying in with the 20 bar moving average there as well, and the 62 with the 200 if prices do move to the downside. Yesterday very quiet, as can be seen here. Market retracing before moving higher, and then spiking up with the news in the US, double topping, and then overnight just below the DP and the 200 MA. Need to get back above this if you're going to have a go at the high of yesterday. If not, then this big round number, which is going to be 7650, taken out. You've got the S1 and the low to contend with on the downside, and then tie that in with what you see in these numbers here in the daily chart. In the currencies, GBP JPY trading down to the 200 MA yesterday, and also let's just have a look out of curiosity if this tied in with a fib number. It did, just down to the 38% retracement, where we see prices have bounced off this area. And if we look at the 30-minute chart, you can see the bounce in the 30-minute chart as well. But earlier on in the session, the market up, pulling back to the S1, then back to the 200 MA, and then switching and then travelling to the downside down to the S2 there. Overnight, prices starting to move to the upside. Need to take out the close, the 50 EMA, DB, the BRN, 200 MA, another BRN and R1, and before you get back to the high. So all of these areas will offer resistance in the market moving to the upside. In the pound, down slightly. The dollar's up on the overnight. There's your targets on the downside should the dollar gain any momentum and move to the downside. But at the moment, it's looking very weak for the dollar, particularly if the Fed do decide to go with stop raising rates in their next meeting. 30 minutes pound, you can see the volatility against the dollar with the release of the news yesterday, and up through the close to begin with, then straight back through, finding support at the DP, doing its best to get back up, spiking back up to the close there, which will also be an 89% level there, bang on it, and then the market continuing to the downside as the dollar gained a bit of strength and then reversed back once more. Overnight dollar strength is weighing on the pound a bit, down towards the low. Need to get back above all of these areas in order to head back towards the high, and that will require the dollar reversing and moving lower. So let's have a look at that one now. So in the dollar yesterday, we see this moving to the upside, and overnight a bit of strength there as well. So the dollar trying to bounce a bit, and again, as I said yesterday, we're in an area where you would expect the market to find some sort of support. It's about 78% retracement there. And in the metals, silver, I'm surprised that we managed another update. Bit of weakness overnight as the dollar is showing a bit of strength, but a good move recently in the silver market, as can be seen there. In the 30-minute chart, we had a bit of a sell-off to begin with. Then the news, this forced the market back up to the close. And then overnight, the market is being pushed to the downside. Coming back, again, you can see there, at least 78.89. The low is important, needs to remain intact. We are finding a bit of resistance at yesterday's DP, the 20 MA and the 50 EMA at the moment as well. So we could see a retest of the low of yesterday for this market. Having moved so far so quickly, you do get quite aggressive retracements in silver. And in gold, the market holding with the same volume as it had in the previous day's bar. So a bit of absorption of selling or whatever at this level, trying to stay above that $2,000 level, which is going to be very important. This is the line here. I know it's a bit lower actually, isn't it? Let me just, I think it's this one here, isn't it? Yep, this is the one. So there's the main psychological level, that $2,000. Bouncing off the low, where this is actually retested the low overnight and is now moving back to the upside. The main thing though is to stay above that 2,000. We need to get above the all-time high of this market, which we looked at yesterday. Let me just put that back on the chart, which I do believe is 2070. Which you can see there. Let's save that for future reference. So yeah, a quick look at the gold-silver ratio, and this still down in that 81 level, so having dropped, like I say, a good 10 points there over the last week since the silver price managed to outperform the gold price. Okay, that's it for this one and for this week, so have a great Easter. And let's see what happens during today and tomorrow. And with that, as ever, thanks for watching. See you in the next one.